Research says that 90% of traders fail in stock market. If you ask me honestly, it may not be 90%, it may be more than 90% also. And let me tell you what is the reason. When I started trading almost 15 years back, when I was new to stock market, even I was a failure trader. I used to think that 90% of traders fail and only 10% of traders are successful, because those 10% of traders, they have some magic indicator. They know some magic indicator or they know some magic strategy, that is why they are successful. And I don't know that magic indicator, magic strategy. Somehow I should know what they are using so that I can also become successful trader, right? Even if you are watching this video, if you are struggling in trading, if you are a new trader, you also must be thinking same thing. 10% traders are successful because they have some magic indicator or a magic strategy. Okay, after being in more than 15 years in stock market, now let me tell you the fact why 10% of traders are successful in stock market. They are not successful just because of strategy, because there is nothing called holy grail strategy or a magic strategy or a magic indicator, magic strategy which works all the time. There is nothing like holy grail strategy. Any strategy can fail on any day, any time. Okay, then why this 10% of traders are successful? What is that special they are doing that they are successful? Let me share it here. There are three reasons why some traders are successful in trading, and the first reason is strategy. Now you must be thinking that just now I said there is no holy grail strategy, there is no magic strategy, but now I am saying they have strategy. Yes, they have a strategy. You need a strategy if you want to become a successful trader, but you don't need a strategy like a magic. You don't need magic strategy because it doesn't exist at all. But you need a strategy which has an edge. That means you need a strategy which works most of the time but not necessarily all the time. That means this 10% traders, whatever the strategy they are using, that works most of the time but not all the time. Sometimes that strategy also can fail. When you do a back testing on that strategy, if that strategy works more than 50% of the time, that means you have a good strategy. In trading, remember, anything 50% or above, it is good. You don't need anything have a 90, 95, 99% of win rate. That means these people have a strategy which has an edge. Second reason why these traders are successful, because of trading psychology. They know that trading is not only about the strategy, you need to know how to control the emotion. Trading psychology, discipline, and these people are very good in that. Third reason why these traders are successful, because of the risk management. That means they know how to manage the risk. Successful traders are known to be risk managers. That means they are very good in managing the risk, and these people are very good in that. Risk management is known as holy grail of trading. That means if you follow risk reward, come what may, you can become a profitable trader. Why? Because risk management is not a probability, it's a certainty. Risk management is nothing but mathematics. Mathematics is a certainty, not a probability. That means risk management always works. It never fails. Risk management is holy grail of trading. So remember, if you are still thinking trading is only about strategy, that is not true. You need to have risk management also along with trading psychology. That means you need to know how to manage the risk. Your profit should be always bigger than your losses. Your profit should be bigger, your losses should be small. Your profit should be bigger, your losses should be small. That is what you should follow if you want to become a successful trader. And that is the objective of today's video. Today's video, what I am going to share is one of my student called Girish Babu, and yesterday I had a chat with him and he shared his success story. And he sent me June 1st to June 10th statement on WhatsApp. And you can see the discipline in his risk management. He said his trading capital is 3 lakh. He always ensures that his risk is not more than 1%. As you can see that most of the time his risk is less than 1%. That means whenever he loses less than 1%. Yes, you can see here that once his risk almost went just little above 1%, but other time his losses are smaller. The red what you see his losses, green what you see his profits. That means whenever he made profit is always bigger, losses always smaller. That is how you should do the trading. Whatever your capital is, you may be having a small capital 2-3 lakhs, or you may have a 5 lakh, 10 lakh, or even 15-20 lakh kind of trading capital. You are a small trader or a big trader, follow risk management. Never lose more than 1% of your capital in a single trade. And that is what I like the most in Girish Babu's statement. You must be thinking that what is that big deal, 20,000 rupees he made in last 10 days. Sometimes you must be thinking that even you make 20,000 rupees in a single trade, then it's not a big thing. But remember, I am not trying to show here flashy MTM. What I am showing you here is discipline. In trading, follow the process, not the result. If you follow the process, result will follow. And with 3 lakh capital, he made 20,000 rupees in 10 days. Suppose he follows the same result for next remaining 20 days in June month. So on the same basis of average, if you take, he is likely to make 18% return at the month of June with a small capital of 3 lakh. Yes, I agree that if he has generated 6% in 10 days doesn't mean that he will make same result for remaining 20 days. It can be more or less. I am just taking the average. So what actually you have to see here is discipline. That means his losses are smaller, profits are always bigger. So always ensure that your losses are small, profits are bigger. Losses are small, profits are bigger. Whatever could be your capital, risk only 1%. Don't lose more than 1%. How to do that? For that you need to follow position sizing. There is something called position sizing in trading. You should follow the position sizing if you want to ensure that your losses are not more than 1% of your trading capital. In my webinar, along with strategies, I discuss about the risk management and position sizing also. And I tell all my webinar students, please follow this, because trading is not only about strategies. But I know that many people still they will not follow, because they come with a mindset that every time they have to be right. Whenever they take the trade, they want to make profit, which is not possible. Any trade can fail, any strategy can fail, but risk management never fails. Strategy is a probability, not a certainty. Strategy can fail anytime, but risk management will never fail. Why it never fails? Because it's a mathematics. Risk reward always works. So that is why they say risk reward is holy grail of trading. Okay, so that's what I wanted to show it to all of you, that with a small capital, Girish Babu made a good return of around 6% within just 10 days. Okay, so don't come to trading with a gambling mindset. Start small and ensure that your losses are not bigger. Follow the risk management rule of not losing more than 1% of your capital. Now let me share few more things about Girish Babu, which he shared with me on WhatsApp chat. What is the method he follows? Why he is successful? He said he follows simple supply and demand. That's it. And if you ask me, with my 15 years experience, even I believe that trading is all about supply and demand or support resistance, whatever you call it. That is what works most of the time. Why? Because trading is all about buyers and sellers. Trading is not about indicators. Trading is all about buyers and sellers who takes markets up and down. And support resistance is nothing but buyers and sellers. So that means if you see support, that means there are buyers. If you see resistance, that means there are sellers. And that is what works most of the time, because trading is all about trading psychology, human emotion. You should know where are the buyers, where are the sellers. And many people think that you should have some complicated strategies, then only this is good strategy. Simple strategy like support resistance, supply demand, they think that it's a useless strategy. It's such a simple strategy, anybody can learn it. People think that complicated mean it works, simple mean it doesn't work. Let me tell you, it is not like that. In trading, simple thing works. Remember that simple thing works in trading, because strategy is just a probability. It's not a holy grail in trading. That is why I am a price action trader. Price action is nothing but all about support resistance. Pivot points and CPR is nothing but support and resistance. Next, I asked him whether he trades only Nifty Bank Nifty or he trades in stocks. For that he told me that he trades only Nifty Bank Nifty. He doesn't trade in stocks. Even I believe in that. If you trade same instrument day in and day out, you are likely to understand the personality of the instrument. So going forward, it will help you in understanding the movement of that instrument. That is how you will get edge in trading. And that's what Girish Babu also saying. He follows only Nifty and Bank Nifty. I told him go through the historical charts and it will help him to know the personality of the instrument. For that he said from last 2 years he has been already doing that every day he is saving his chart in a different folder. That shows his passion. That means he is passionate about trading. He is not in trading just to make money, he has passion also. And also he said he is expecting around 10 to 20% return on his capital. So that means he is not thinking like a gambler. He is not thinking that I have 3 lakh capital, I want to double my capital within 1 month. he is not thinking like that. How he is thinking? He is thinking like a serious businessman. So that means his expectation is not like a 100% return on capital. He is thinking about some 10 to 20% return on capital. And how he is achieving it? By following the risk management. And finally, I asked him what made him to join my webinar. He said he watched my YouTube videos and he got impressed by my YouTube videos and he decided to join my webinar to learn more. That's what I wanted to share it with you all about Girish Babu's success story. And you can see that in this video, I not shared any big MTM or something. I just shown you that how a small trader with even a 3 lakh capital, he can slowly grow his capital by following the risk management. Risk management is the holy grail of trading. Again, to recap, whenever you take the trade, it is not possible that you can right all the time. You don't have to be right all the time in trading. You can be wrong in trading. Whenever your trade goes wrong, cut your losses small. When your trade going in your direction, let your winners speak. That is what risk management. That means always ensuring that your profits are bigger, losses are smaller. That is the one of the way to become a successful and profitable trader. So I hope you have liked this video. If you have liked this video, then hit that like button and subscribe to my channel. If you want to learn more in my webinar, then you can click the link below this video in the description section. There I have given a link for my upcoming webinar. Okay, go through that link and read the contents, read the FAQ and read the disclaimer. After reading that, if you are interested to join my webinar, then you can contact me through WhatsApp or email and you can enroll for my next upcoming webinar. Okay guys, so that's it. Thanks and all the best.